All attendees are in listen-only mode.
Sorry, I just saw the message that there was no sound. So basically, you've seen all about risk disclaimers, so we can proceed further. Guys, I think that we have the sound now. Excellent. Let me just do a quick sound check. Excellent. Yes, everything is fine now. So we can proceed. You have seen all the risks associated with Forex, all risk disclaimers, so we can continue. Yeah. Well, I will show you the results. These are the results which I have on my platform. Well, it may differ. Maybe some of you got better results, worse, I don't know, but I got from last session recap these results. Cable was plus 20, 64, 65 alternative sell. Aussie was plus 70, it was buy trade. This was the best trade for me personally, although it went more than 100 pips into, but this was my result. Euro yen, it was alternative sell plus 15. USD CAD, I got it on break even. Well, that was very funny trade because stop loss was missed by 2 pip. I always add spread to the stop loss. So if the stop loss is 30, I add spread and +1 always, because Admiral markets have very, very tight spreads, and I usually put 2 or 3 pips on my stop loss. So this was, when I saw it, I was almost sure that it will hit a stop loss, but basically I closed it at break even, but later we saw that the pair really went down. So it went down more than 100 pips, but well, for me it was like this, break even. And euro dollar also, I was stopped at break even, although it was plus 45. I will show you now. This was the last session recap. Well, basically it was euro dollar position, sell around 30. Now you can see it all. Okay, euro dollar. Well, euro dollar, this was the time of our webinar, and basically what I saw is I saw a sell trade 36.85. Look at this. Well, I don't know. My trade was stopped at break even, but look at this. Potential trades here, and potential trade here. All it was about sell around 36.85. Well, it was basically a good trade, excellent trade, but I forgot to. It doesn't matter. I was stopped at break even, but well, you see, initially it went good for 50 pips, and on the second chance it also gave us a trade. Initially it went 30 pips, and second chance trade it was good for 50 pips. Third chance trade, which I didn't take, of course, well, it went to 120 pips to the downside. But this was it. Sell around 36.85. Well, that was it. Cable, it was this position. Sell around 64, 65. What it mean? It was the time of our webinar. 64, 65. This was it. Basically, this was it. And initially, it went down for 40 pips. But well, I got some 15 pips out of it, but 40 pips could have was the maximum for this trade. Well, that ain't bad, really. If you go with trailing stop, you will not have a full potential, but at least you will get some pips. And well, I'm okay with even plus 20, 15. It's okay. This was a mistake. It's not alternative sell. It's a position sell. So it was a position sell trade, as it was written in our slide from 10th of February. This was the trade of the week. Buy around 89.30, stops around 88.70. What happened is basically this was the time of our webinar, and the price acted some 9-10 pips of the 89.30. One bottom, two bottoms, three bottoms, triple bottom around this level. Always pay attention to this. When I say something like this, buy around or sell around, you always need to pay attention to double tops, triple bottoms, candlestick formations, always candlestick formations, because this is a sort of practical naked trading along with my Camarilla MACD setups. So basically, all sort of price action can be accounted to this. So this is triple bottom, as you can see, 1, 2, 3. If you see triple bottom and price generally up in uptrend, look at this high here also. This is a retracement, and basically it went to the upside by, well, look at this candle. It was very, very good. But well, it has more potential, really. It has more potential, and even though it hit the target, it had the potential to go even more. USD CAD, as I said, it was a perfect stop loss, really. And sometimes I'm very proud of my stop losses. That save me a lot of times, because I always play stop loss, no matter what. I always play stop loss. I don't want to trade without stop loss. I'm not, how can I say, I'm not brave enough to trade without stop loss. And I prefer, because that is the way how I teach people and how I do. My money management is pretty strict, and my stop losses are always put, even though I need to press manually, I do it, because I want to stop if I see that my target won't be hit and the price is going nowhere the opposite direction. I just can place, okay, this is stop, I'm stopped out. But well, when you manage the risk accordingly, you're always safe. So 2 pips, look at this, hit my predetermined stop loss almost to the pip. I added only 2 pips, and look at this, it went by a 2 pip, missed the stop loss, and then it went to break even. I closed it at break even. Although look at this, the trade was excellent afterwards, more than 100 pips. And I told you, I saw it, I just knew it will go down to the downside. It showed me on the screen. Look at this, head and shoulders, broken, everything. But this was that stop hunt. That didn't do anything with the classical trend. Well, you can say it is a trend, it is valid if you go with this. But at the time, the price was here, and I didn't know that it will go like this. So by the time, if you remember our last webinar, I told you, I again see the message that there are some sound problems. Do you hear me, guys? If you hear me, then yeah, it's okay. Thank you. Great. So if you remember our last webinar, I told you, someone asked me, do I see a long trade? I told them, okay, you can start shorting from this point, okay? And I saw it really going down because this is left, this is head, this is a sort of right shoulder, this is a sort of neckline, this was broken, retested, and the price was really struggling to go down. Well, then we saw a fake price action to the upside, some 45, 50 pips. But then, you know, the deeper in price action, the deeper the retracement is, the bigger movement it will be in the trend direction. So this was basically counter trend. But the bigger the counter trend is, retracement is counter trend. The bigger the retracement is, the bigger movement will it be. It will be. So look at this. After this, 150 pips to the downside. So although this trade was break even for me, I hope that someone got the money. Maybe some of you are patient enough to drive the trade. But you know, usually if my stop I usually place my stops around 30-35 pips. But sometimes I may, if I play one of these setups, because mostly I'm intraday trader, and if I watch the opportunity, I will trade it. Not always I go for full setups. I can pause this, but it's not always that I trade. Why? Because, well, I made 10 pips. Excellent. Well, 10 is always better than nothing. I trade all of 23 pairs. So if I see 5 pairs here, if I have a trade, let's say euro-yen trade, and I have cable trade, and usually with 2 trades, I will be at my full risk because, you know, I play safe, but I always try to calculate my risk. So sometimes I can also have 3 trades open, 4 trades of 23 possible trades, right? And if I put my risk to be, let's see, 3%, 2 or 3% per day total, I usually have 1, 2, 3, maximum 4 trades running, and I want to be in that 3% of a risk. And then sometimes I just see the good possibility which I analyzed, but I don't take that setup only because I'm at my full risk. And that is how you all should do. If you have 2 or 3 positions open and you are above your risk or you are in your risk, then you cannot open, even though you see a good setup, you see that this will go down. Well, you cannot open it just because you are in the risk margin. So you always need to pay attention in your risk margin. And that is, you know, that is my job. I do it for myself, I do it for others, I analyze all of those pairs, and if there is potential setup, I will write it on Spiders then, I will write it also on my blog. So guys, Twitter, use that. I always use that. I will always post on Admiral Markets blog and Spiders then if I see that there is potential setup. If you remember, I put on GBP yen last Friday. I did 2 more setups. So always subscribe to blog, subscribe to Spiders then on Forex Factory, and you will receive real-time updates, because I never do any analysis pre-fact, post-fact. I always do it pre-fact. So if this was the plan, I always analyze it and then the price starts to move. I don't like to write after the price has made movements. Let's say I made 50 pips and then I write, okay, I made 50 pips. What good do it for you? It does nothing. So all good traders won't say I make 50 pips, I made 100 pips, or they even won't admit they lose. But the biggest problem in real-time analysis is because all of those well-known names, most of them, I don't say all, but most of them will write it, let's say, I made 50 pips, but did we see a setup? It was after the fact. So all of my analysis, always remember that, are pre-fact. So for real-time updates, go for a free education on Admiral Markets, then you go to webinars, to my blog. This is my blog. It's Tarantula FX. Also on Spiders, then you will see full-time, real-time analysis. You can see Aussie for February 14, that was real-time analysis. Also GBP, Japanese yen. Some of these trades sometimes won't happen because, you know, I'm a pullback trader. I prefer the price to pull back before I make any entry. So then you always pay attention to Forex Factory and to Admiral Markets blog. Okay, let's go with today's setups and possibly tomorrow and the day after tomorrow. Today is a President Day in US, so the banks do not work, and we of course do not trade when we have bank holidays. You know that. And let's see, position buy. I see that euro dollar will go up, and I'm saying these setups are intraday setups, so they are usually valid today, the day after, so it's tomorrow, and the day after tomorrow. Sometimes it's 2 days. Well, if you saw it, very often it happens that those setups go even after 3 or 4 days. But I don't trade it. I don't recommend to trade it because all of those analyses are made on 4-hour or 1-hour time frame. So basically, what you need to do is, well, cope, go with the flow. Trade on 1 hour, look at 4-hour time frame, zoom into lower time frame if you want. Use your strategy, whatever you do, use your own strategy, but always pay attention to these setups and always see what I'm gonna do if I trade. So this is what I see at the moment on euro dollar. Well, and I need to say it's a little bit hard to do analysis when there is when there are days like this, because today price didn't move really. It went 20 pips down, 20 pips up. I knew it would happen, so I didn't even take a serious look. I only did those analyses, but I didn't want to bother with trading, even with scalps, because I don't like to. Sometimes, especially it's Monday, I don't like to scalp. Also, when on these days, even though there have been some nice scalping opportunities, but you know, why would I trade if I cannot grab at least 15, 20, 25 pips? I don't bother really. I don't say 10 pips is good also. 10 pips is great if you do it. Sometimes you will see that the price is going down and it starts to retrace. Well, then you can grab your profits. Why not, guys? Why not? You cannot go broke by taking profit. That's a very good, how can I say, it's a sentence, but it was said by a very good trader that you cannot go broke if you take profit. And you always try to take profit, even though if it's 10 pips, well, who knows, maybe the price will hit your break even. So it's always best to get some 10 pips. Sometimes when I see that the price is going 30 pips in my favor, I will put a break even plus 30. So if it goes down, even if it hits, I'm safe on 30 pips. So, well, it's about trade management. It's about how you do. There are various rules, but you need to adapt. You need to know about the pair which you are trading. You need to know about the things which you have been learned. For me, as I say, even 10 pips, if I see the price is going up, and I see that it starts to retrace, well, plus 10 sometimes, why not? Also, look at this. Position buy 36.85.70, stops around 36.50, tight stops, targeting this level. And I see a first scalp at the first touch around 37.40, 20 pip trail stop. If the price is going violently in that direction and it starts to break 37.40 very fast with big momentum, big candles on M5 or M15, you don't take, of course, on a big momentum. For these setups, you always want to take this one. If it doesn't happen, then we take this one at the first touch. So it means that the price gradually go to 37.40, gradually then starts to go a little bit range in lower time frames, and it will usually retrace. 37.40 is big level. I can see if it happens to break, I can see that the price will go up, but there is a strong resistance around 37.70 to 38.00. So if you are a pullback trader, trend trader, then even this setup can be very valid because it will take a full price spectrum to 36.85.70 to this if it doesn't stop you. But why do I take this setup? It's just because I can see it like this. You see, it's a trend, even though it starts to form a channel, some sort of a expanding channel, and you can see that we have 23.6 below the trend line. Also, there is a big, look at this, 38.2 at 36.60. So even if it drops, it shouldn't get below this point where our stops are. 17th of February. Cable also, I didn't put support resistance levels because why would I do it today? It was basically it was a non-trending day. Tomorrow new levels will be printed out. Also red levels are most of them are valid from the last webinar, so it doesn't matter about those support resistance levels. It doesn't matter. Just pay attention to these setups at the moment. Buy around 66, 65, targeting 68. Well, what I can say about the pound is very strong. Even though we saw it tanking like crazy from this point to this point, if you see this, it almost went for 400 pips of retrace. As I say, the bigger retrace is, the bigger the trend trade later is. Look at this, 60, and it has potential to go even more. But I want to see it a bigger pullback. I want to see it ideally here. Look at this, 78.6, look at this, 66.65. I don't know if it happens, but if it happens to go there, I will look to buy it. It's a strong level, it's 78.6, but it's also in a confluence with previous high and with red level, which I have here. So basically, I would like the price to be there. Now, if it happens that the price goes up before giving us a pullback, then we can sell around 68.50, 20 pip trailing stop, scalp, swing trade, because I think that if the price breaks through this level, it has some history around 68.75, but also at 68.50, I would like to see a first touch of that level and to try a scalp. On Aussie, I will see potential head and shoulders on H1, but also I see a buy around that level, 90.15. Why? Look at this level. The price should retrace a bit. Look at this confluence, 38.250. It's a confluence, also confluence with head and shoulders, left, ahead, right. It looks bearish, but you know, it needs to break at this point here to go down, but also I can see it going to the upside. And look at this. By the time I analyzed this, it was basically 90.24. Now it went 15 pips to the upside. Well, it happens sometimes, but I would like to see the price here, and this is potential target, 90.80, 91. I also have, well, I can see that it can be also sell around 90.50. Just for a scalp, because look at this level. It has some history here. It has some history in selling. Look at this. Man, now I won't flip the charts, but there is also near-term history here. It was first buying, but not substantial buying, and then it was selling. Again, it was very heavily sold from this level to this level. So I can see that it can be a really nice sell scalp around this level if it goes there. But first, if it goes here, then we can trade it. So basically, what we want to see either this or this, whichever happens first. If this happens first before this, then we go with this. Euro yen ranging, we have potential bearish wedge, but interesting situation on euro yen. I can see while the price is above this level, 139.60, we can go with long trades. Why? Because this may fail. This potential wedge, this is the top of the wedge. If it has retested this level successfully, it means that it will go up. I just hope that tomorrow we may see another retest when new buyers kick in, US buyers. They are on vacation today, so if they kick in tomorrow, we can probably see a new buying around this level. So successful breakout pullback continuation at this level, targeting 140.05. If it happens, if they happen to be around that level, while as long as euro yen is above this level, it has a potential to shoot at this level again. Okay, and alternative scenario is short below 139.50. 139.50 is this level. Look at this. This would also signify a break of the wedge. So if it goes there and pulls back, retests, it will go down. It should go down. 25 pip stop targeting 138.90. There is a bearish wedge, but also there is a potential buying around this level region. This is a heavy battle between bulls and bears. So that is why we are having basically a range also, range. Now let's see what will happen also with dollar yen. This can be very good trade. I think position sell 102.40, but also pay attention to 102.20. I see sell trades on this pair really. Look at this. I see sell trades. We have a descending trend line there. We also see a downtrend with a correction here, and I can see short trades around 102.40 and 102.20. So it can happen to be just like this at 101.20, but also at 102.40 around this level. So as I can tell from this chart, it should go down. And it should be a good trade, but we will see. So this is my first potential, but I will also pay attention to 102.20. 30 pips stop targeting 101.40. 100 pips can be targeted with this trade. And also, if it happens to fall there, we can buy for a scalp around 101.40, which is also low here, and also low there. So we have a nice level hanging there for a potential buy trade around this region. Of course, alternative scenario is scalp trade, basically a scalp swing because it has 20 pip of a trailing stop. So guys, those are the setups which I have in mind, and we will see what will happen tomorrow. I will go through this slide so you can print it on your screen, and also you can write it down. So we will see. Tomorrow is a new trading day. Also pay attention to my New York setups, because very often as I said, I will be posting New York setups. That means when New York session starts, usually after 45 minutes or in the first 45 minutes of New York session, I will post setups, probable setups, but those will probably be different pairs, maybe Swiss yen or Australian dollar, New Zealand dollar, or GBP New Zealand, whichever pair I find interesting in New York session. As you know, I don't trade only 2, 3, 4 pairs. I trade almost 23 pairs. So any of those setups I can see, I will be also posting on Forex Factory and Admiral Markets blog. Now these are majors, and of course dollar yen and euro Japanese yen. Pay attention to these. Cable also, Aussie, euro yen, dollar yen. Okay. Yeah, my charts are here, but I cannot show you the whole Camarilla MACD because it's a proprietary method and I just cannot show it live. But all of those levels, you can see it also. You can see also all of those levels, all of those Fibonacci levels here. So you are free to print screen, whatever. But I cannot show you my Camarilla MACD because, you know, there are many people who are trying to steal proprietary methods and then put it freely on the web. And you know that I do it for free here on Admiral Markets blog, but Camarilla MACD is a paid method and it will be very unfair to my clients to share it freely because they have paid for it and I'm not in the situation to give it really freely. But all of those setups are made also in Camarilla MACD and they're adapted to red levels and basically practical naked templates so you can all use it to your advantage. This is euro dollar, this is cable, this is Aussie. Look how good it seems, and it may be a fake head and shoulders here. This is euro yen, this is dollar CAD. This is not for this week, this was last week, and this is dollar yen. It's easy to draw these trend lines. Well, I presume that most of you know how to trade, or if you don't know how to trade, as I say, you can always Google freely on the web and go for free systems, but price action needs to be learned. It's not the same as if you are trading mechanical method, which tells you, okay, stochastics are at 80, then sell. It can be good for scalping trades, but on higher time frames like 1 hour, I like to see really price action, not indicator trading. Indicator trading is good for lower time frames. But if you want to trade intraday and with trying to steal the full price potential, then its best method is to combine divergence, to combine price action with those levels, because levels are very important. Those wicks, always pay attention to wicks. Don't ignore. This is very important. You see this, even though the body is very small. Look at this, dragonfly. Those wicks are very, 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 very important. I cannot stress out how important those wicks are. So don't go, if you draw trend lines, don't go like this. Always use wicks. Always connect those tops and bottoms, wicks. Okay? Again, a quick overview of the charts, and it's time for you to ask questions if you have any. Look at the pound, how strong it is. And if it drops here at this point, well, what would I do? I would probably buy it. It needs to drop. Well, it needs to drop. I'm not sure if it will drop today, but only 40 pips to potential buying here. But I see it go up again. Aussie, Euro yen, and dollar yen. Dollar yen also, this can be really for me maybe the trade of the week. I'm not sure, but we will see. Now about GBP, Japanese yen. Predrag, I think I will do it tomorrow. At the New York session, I may post new setup on GBP, Japanese yen. Still, it can happen that it can be a Friday price action. But look at this. If we see it, still I think it can be valid. If we see a breakout pullback continuation above this 170.51, we will see higher levels. This is the crucial level, if you ask me. This is the crucial level. About cable yen, for me, this is the crucial level. 170.50. Above that level, it will go up. It was a trigger happy trade on Friday. It was a trigger happy trade for 10 pips at the break of this level. But of course, it was Friday, it was not so strong, and it was basically the end of the day trading. So probably it was better to short it there because it was the end of the day. But still, I see if it goes above this level, it will go here. But I need to see tomorrow. I cannot say more. It's too narrow. It's a very slow price action today. So pay attention to the blog and to Spiders Den tomorrow. Usually, of course, on the London session, in the London session, and also in the start of New York session. In the first hour, I will probably be posting setups on different pairs. It may be also CAD Swissy or something like that, which you may not trade, but you should. You should always pay attention to at least 15 pairs, so you can have many opportunities to trade. It's trading. It's like evolution in trading. First, you start with 1 or 2 pairs, but you eventually go to full price potential. So why would we just trade 1 or 2 pairs when where we can have the opportunity to trade all of those pairs, right? So I prefer Forex because it gives me the opportunity. I don't like those binary options. I don't trade stocks, commodities. It's too slow for me. And I prefer Forex not only because of those fast movements. I just like because we have all of these pairs at our disposals. So we can always pick one and trade it. Okay, guys, thank you very much for listening. One more question. Let me see what was the question again. Appreciate your views. Today do you think it will be bearish if today daily candle end with such bearish candle pattern cable? On cable daily, it looks bearish. No, look at this. It looks bearish. But if you see this price action, look at this. This is what it tells you. What does it tell you? Look at this. This was an important level. Why? If you see this candle here, it has a history. It has a history because it was history in selling. But if you see, there is uptrend. And in this point, there was enough retracement to push it to the upside. And if you watch that level, particularly, that is the level which I will buy. It doesn't matter only the candle. Why? Because you see, this was very, very, very bearish candle. But at this point, remember, this is daily chart. At this point, we could have 100 pips to the upside. And you know, Yip, I am a daily trader. I trade intraday, and I'm not concerned if the day after tomorrow, or look at this. This was the potential to go long, and next day it was a short. I don't care if the day after tomorrow or something like that, it will be an opposite trade, because I'm just interested to see the price for this day and day after tomorrow. So if this day gives us this price, I will buy there. Maybe it will go 30 pips to the upside, but then during that day or maybe the next day it will go down. So you want to take the price during trading day. If we would do long-term analysis or not, then I can say, okay, this might go down after some time. But it's easier to say it will go down. But tell me what will be tomorrow. That is why my job is maybe harder than other analysis. They say it will go down after some time. I say, tell me for this day, where will it go for this day? Where? Whether can we take a short trade or can we take a long trade? So basically, I'm doing intraday price analysis, and I want the price to see here, probably, and if I see that it's going there, I will look to buy something around this. Previous sellers here, but also this level is broken at this point, and in this point it went to the downside. So I think it will go up around this level. Daily chart, look at this. Also the candle closed here, and if you, even if it was short, you could have grabbed 40 pips there, right? Look at this, 100 pips here, very big bearish candle. Look at this, big bearish candle of the resistance, but at this point it went 300 pips to the upside, although it looked bearish. Same thing here, here, all of those, let's say, bearish candles. But look at this, even though you can also take a scalp trade from here. Let's say that you have opened your trade here, you could have taken some 40-50 pips to the upside. Daily chart is just for direction, not for trading those candlesticks. I don't do that really. You can see some direction on but not candlestick formations. Okay guys, so I don't see any questions. I will go through this again very fast, and then we can conclude the session. And again, I'm telling you, I'm inviting you, follow Admiral Markets blog, because each day it will be some changes. Each day I will be posting more setups. I won't do just cable and euro dollar analysis. During New York session, I may be posting 2 or 3 setups for additional pairs. I will include any of those pairs during New York session. So that is the time where you should also pay attention to Spider's Den and Admiral Markets blog. I will post levels probable with maybe with I cannot tell you directly buy sell, but I will put my views. Target price, stop loss, entry price, something like that, okay? So pay attention to also New York session. As it was on Friday. You saw it, I put 2 analysis, Aussie and GBP, so tomorrow it may be 1 or 2 of those pairs. Okay, this is Euro, this is cable, this is Aussie, this is Euro Yen, and this is Dollar Yen. Okay, if you don't have any questions, we can conclude the webinar. I can say, make green pips, be with me, be with us. There will be many more interesting webinars. I've also prepared some expert advice with Forex correlations, how you can trade correlations, and something about obscure exotic crosses. Then we will have scaling in, scaling out. Then, of course, it will be also chaos trading with Chris Warzik and me. I also prepared for upcoming months Marimet trading strategy. You will see this is very interesting for you, because we are starting with Renko range bars part 1, and in part 2 I will be giving free system, which is very good. I traded personally a couple of years ago with range bars. So basically you will see some free stuff, of course. Thank you guys for listening and paying attention to webinar. As I said, be sure also to log in to Spider's Den Admiral Markets blog tomorrow. During New York session I will be posting probably new setups. Guys and girls, yes, Sylvia, thank you for your notice. Guys and girls, well, yes. Traders, we also have women and girl traders, so it's good. That is why men and where men and women get together, probably for good in trading, if not in other things, right? Just a joke. Okay, tomorrow new setups. Use these setups on these pairs, and of course be sure to check Spider's Den and Admiral Markets blog for new updates. and mark those levels on your charts. You might get some nice pips of those setups. Thank you very much for listening, and see you very, very soon. Cheers.